talking about a fourth industrial revolution. We're talking about a transition to a hydrogen economy. We're talking about a transition to a green economy. But these are not necessarily interchangeable terms, and they're not necessarily terms that sort of speak ultimately to the same playing field. So fortunately, and just do a quick recap around the different fields of play that are opened up when we're talking about a fourth industrial revolution and when we're talking about these transitions.
Irina predicts that the share of world energy demand of electricity is set to double from about 20% today to almost 50% by 2050. And interestingly, that is all happening within a context where we are shifting away from fossil fuel-based energy generation towards renewable energy, driven in large part by the significant improvements in the cost proposition of renewable energy sources, the flexibility of electricity generation from renewable. You can put up a small solar plant for 1 megawatts or 200 kilowatts, all the way up to 100 megawatts, which allows you to have these distributed generation solutions where you no longer have to rely on well-established large transmission infrastructure, right? So if you take all of these factors into account, the growing role of electricity within this context where we're shifting towards renewable energy, the implications for metals are significant at a number of levels. I think one of them is the fact that there are a number of commodities that become much more in demand the more electricity is used. Copper is the one that immediately comes to mind, right? And it's no surprise to see the kind of impact we're seeing on the demand profile. But there's also the whole theme of energy storage, which also becomes very important. And again, when we talk batteries or energy storage, we're talking not only mobility as required in electric vehicles, but we're also talking stationary energy storage as required in applications such as grid connection in the grid or commercial and industrial applications. And when we talk that, the implications again for mining are quite significant because you're talking about a number of commodities, whether it is the EV metals or in the stationary space, we're talking elements like vanadium. And we also talk about fuel cells and their growing importance and impact on PGM demand. So all of these factors, I think, play into a space where, from a mining perspective, present significant opportunities for quite a number of metals. It's the fact that we anticipate that stationary storage deployments are expected to grow something like 120-fold over the next 20 years, from about 18 gigawatt hours to 2,850. And that's just stationary storage. That's before we talk about applications in mobility. And I think the big question in all of this for us as mining companies is, number one, which commodities are we going to focus on? But I think, number two, there's also an interesting theme emerging, which is around how much of that value chain within the metal space do we participate in. The one challenge I do see, though, which I do want to mention, is around the fact that ultimately these metals are going to require primary processing infrastructure at some point. If you think about the kind of demand increases we're talking about, even whether we're talking vanadium or we're talking nickel or we're talking lithium, you're going to need primary processing infrastructure. And one point I would make is that, the old paradigm of digging up this material and sending it off to China for processing, metallurgical processing, I think we need to turn it on its head. But this is much more, I think, a challenge for policymakers and governments to ensure that we can capture those economics locally and establish, beneficiation plays. And the more you've got that, I think the more of that value chain opportunity you can capture. And I think that will in turn open up opportunities for junior miners who don't necessarily have the big bucks to build the big processing facilities that are required, right? But need to channel it to somebody to do that final processing.
Well, I'll even put a punch behind that actually the capital's coming. So we've been starved for capital. We're not going to be anymore. There's a wave of capital coming. When the squeeze gets on for this material, the big boys are going to come and say, how do I put capital into projects? And you're going to see a whole wave in the next 5 years of big money coming into saying, we'll put the infrastructure in, just give us the stuff. So that's coming. That's my prediction for the next 5 years.
Michael, Fortune's touched on a couple of data points there around the PGM space. And we've just seen share prices rocket. We've seen metal prices rocket. We've seen fantastic dividends, big strategic moves sort of coming out of that. Are you, as a junior with a project in development, are you seeing that same kind of demand and interest and kind of pull from your investors?
For investors out there, I think we're very early in this. You're right, there's focus on dividends, paying dividends from the majors and so on. It was such a scorched earth policy for a decade that, you know, that's the first thing to happen. We're nowhere near the performance in juniors yet. That hasn't started at all. So if you're an investor, you're super early. That's the first point. I think the second point is, you know, coming to Fortune's comments on the pivot of energy and transition and so on, stationary power, which is, I understand, in their business, certainly fuel cells and PGMs, but also batteries and the whole electrification of the EV business. I mean, one interesting statistic is, you know, going from something like 35 to 40% of the cost of a vehicle in electronics and electric components. You know, you move up into hybrids, that goes to 50%. You go to BVVs, that becomes 70%. You go to fuel cells, that becomes 80% is in the electronic and electrical component of the cost of the vehicle. So there's a whole transition there in what materials are going into either stationary power or EVs or whatever. All of that is moving very quickly. And the market is way behind on understanding that and the value proposition. So, you know, one of the things we're doing is putting PGMs in a lithium battery. And everyone always says to me, oh, well, you know, that's just ridiculous. They cost too much. Palladium's gone way up. You can't put that in a battery. But what's the value of a battery that has a 40 or 50 or 100% performance increase? What's the value of that in the market? That's the piece that gets missed, is that during this transition, we've forgotten what the value is. You know, as I always like to say, you know, the battery that's in an EV, for example, is not your grandfather's flashlight battery. I mean, just to put it in real terms, you went to the drugstore, you bought one, you put it in the battery. If it didn't work, you didn't care. You got another one, you threw it in there. That's a battery. That's a battery in most people's mind. That's not where we are. I mean, we rely on batteries in this thing. I always ask people, you know, a simple question. For example, if this was charged once a week instead of charged once a day, would you pay $100 more for the phone? Everybody answers yes right away. So you can see the value of battery storage, and its position in the market has changed completely. Therefore, the commodities and the value of the commodity that can go into them has changed completely, but nobody's tracking that. They're thinking of commodities like their grandfather thought of commodities. It's not the same thing anymore. In the case of our Waterberg project, you know, it's a massive palladium mine. It's taken us a decade to get here. So we're finally at construction decision, but it's one of the few projects that's actually ready to turn on to supply the palladium market, which we will end up putting in a battery, by the way.
Anton, you're in the nickel business. You've got a great project. You're kind of ready to go, but that doesn't make the days easier, and it doesn't make it easier to get the money to get your metal out of the ground.
The challenge now is to ride the growth. Our ability to be niche and to produce through a electro-winning process without refineries, and therefore in a far greener sense, a nickel sulfate is really where we can start to make a difference. And that gives us the most important thing as a junior, which is flexibility. The ability to be maneuverable, to do things differently, and to service a niche market. If you take the product that we are mining here, which is a nickel sulfide, absolutely, it's all about the grade. Grade is king, as the cliche goes, and being able to produce a premium grade concentrate and to be able to take that up to a nickel sulfate, the beneficiation that you mentioned, and to be able to then directly supply niche market customers for the manufacture, in particular of batteries for EV, is where you can get a big advantage. And that's very much our focus. You really can ride the wave in terms of that unbelievable growth coming in EV if you are able to provide the specific product. And I think as a junior, you have more flexibility to be able to get that product out. So the other thing to bear in mind is in the world of nickel sulfides, if you are producing a nickel sulfate and your grade is high enough in your ore body, and there are a few of these little gems, both in East Africa and in Southern Africa, and not to discount the large layered complexes and the polymetallic deposits of Bushveld, the Great Dyke, but the niche deposits that are high grade offer the opportunity to do a carbon neutral process, essentially, especially if you've got access to hydroelectricity, of solvent extraction and electrowinning. High pressure leach, take your concentrate, upgrade it, and produce a nickel sulfate. And you can produce, if you've got about a 1% in the ore body deposit, you can upgrade that to a 99.49% nickel sulfate.
Tim, at Penzana, in terms of your outlook and the outlook for rare earths playing in this space and actually looking to future demand that you see in those specific commodities that you're focusing on. I know you've had a very positive experience in Angola.
We have. I mean, we've benefited in a way in terms of the timing has been right with the drop-off in oil prices and the government's move to try and diversify the economy a little bit further away from petroleum products and diamonds, as in the past has benefited us in terms of really supporting this diversification into other forms of mining, agriculture, and tourism. And we had the Secretary of State for Mineral Resources up on site again a couple of days ago, making sure that they were doing everything they could do to assist us during the ongoing travel restrictions and under the COVID regime. So, yes, absolutely, that's always a key element, and particularly having ministry officials who are technically competent as well. They understand what we're trying to do, and they understand the gestation period and all of the logistic support that goes into that. We're fortunate in terms of also being close to infrastructure in hydropower from a carbon footprint point of view, and recently refurbished railway line and port in Lobito from the point of view of inward and outward materials. Our other particular aspect is that everybody's suddenly starting to wake up on the fact that magnet metals are one of the key components in making sure these wind turbines and electric vehicles actually have the best efficiency and optimum performance. And little known things like neodymium and praseodymium are now terms that people have become familiar with, and now in the front-end engineering and design phase, and hoping to benefit from the ongoing stability that's returned to the rare earth market itself.
We see how the excitement about the future, makes commodity prices go up. But there's a missing link in the middle, and I think Fortune touched on it in terms of processing capacity, and I think Anton touched on it in terms of you can mine nickel, but it's actually nickel sulfate that the world is looking for. And it's not the same thing. There may be $1 billion capital sort of in the middle, or you may have a competitive advantage in your ore body, like Antonis was saying. Tim, I did become a groupie of Penzana, but that's between you and I. I'm not sharing that publicly. It's for audiences to decide whether they like your story or not. When I endorse something, it goes wrong. So I'm not endorsing you, but I am liking what you're doing. And I want to explore with you. You are in a business that I can relate to, because in my private life I own a manganese refining business, and we are non-Chinese, and we get a huge premium, and we exist purely because we are non-Chinese. If I cut through all the other things, what is the sort of dynamics going to be in your space by being outside of China? Because the sort of rest of the world versus China geopolitics is also going to play out, especially when it comes to energy storage, critical metals, etc. Do you want to comment on that? Do you see that as an advantage? Is that something you can position accordingly and extract extra value out of that, Tim?
Yeah, thanks, Bernard. Absolutely. I mean, we spent most of last year actually developing the downstream processing, recognizing that shipping a concentrate out of Angola off to China for processing might be an easy thing to do, but it's not going to give you the best value in terms of return on investment. The real money is being made down the line, and hence we actually looked at what are the opportunities, and they're very limited. Outside of China, there's really only one player that's independent, and that's Linus, with the processing facility in Malaysia. So again, we used the COVID period to put our design hats on and got stuck into designing a plant in Saltend in the UK to actually take the concentrates that we produce in Angola and turn them into individual products for the market. And in addition to that, we added another chemistry set in Angola to make sure that we've got the highest value product coming out of Angola that it is logistically and feasibly possible to do given the constraints on infrastructure and so on there. But one thing we do have there is hydropower. So all of the energy intensive side of things is done in Angola on that front to produce a high value, high purity product that can then be further separated in Europe where the market is.
One of the points I would have challenged even experts like CRU on, the conclusion that the world's got unlimited manganese skips the in-between middle step of, do we have manganese in the sulfate form that the battery manufacturers want to have it? And the answer is categorically no. I mean, it doesn't exist. And then obviously you need to crack the recipe, then you need to build the plant, then you need to supply metals for a 3-year accreditation process. These are not the conversations that are taking place. And so in the past, you looked for smart geologists. I tell you, I would invest on the quality of your chemists, chemical engineers and metallurgists going forward, because I think that's going to be the competitive advantage.